there is a question that you just need to put into your risk management discussions with the clients that you have. And that is, it is a self-assessment of need. Ultimately, there is going to be a period of time when people look back at this. We're looking forward today. But we also know that history tells us that some point in the future, it may be 2 years, it may be a year and a half, people will look back at this program. That's why the banks are very concerned with the anti-money laundering issues, as an example. Well, what things should we be thinking about as CPA professionals? And one of those is that when we advise clients in that trusted advisor role, we always talk about risk. And part of the risk is a public image risk. It's very easy in this notion of self-designation that I've been injured to say, for a business person to say I've been injured. If you're a restaurant that's closed, it's a no-brainer, right? But what we will know is that a lot of this is going to become public. Who gets these loans? Who really thought they were hurt, et cetera. And I think some entities that are mainstays in their communities, you need to help people think through that 2 years from now. It's going to be public at some point. Do you want to be an entity that was deemed to have been hurt, depending on what type of industry that you're in? I'm not saying that should thwart you from taking advantage legitimately of this program. People should take advantage of it legitimately. But I just think you need to that's one more thing you need to be having that conversation with, which actually leads me to the issue of agents or agencies. We've gotten just an enormous amount of questions on the issue of what characterizes a CPA as an agent, or should they be. We've put out a one-page set of guidance related to that. That guidance is very easy to understand. What we say is you can be an agent. If you're an agent, that means the funding comes to the entity, the firm, from the bank fee. That means you have to have a relationship with that bank. You have to enter into an engagement letter. You have to make sure that they're willing to pay that particular fee. But we've also made it clear that it is okay for firms to be engaged in advisory services with their clients, and clients to be paying them to go through all of this decision-making process. And there's another factor to consider. If you sign in as an agent, or if you sign on as an agent, in almost all cases, it's probably going to affect your independence. And so if that client is a client in which you are issuing independence type of engagements, then that's a factor for you to consider. So we have done nothing to say you cannot be an agent, but we've put the information out there for you to think about as you go through that process. We've also, for those who are insured through our professional liability program, there's a risk alert that's been published in that area as well. Just different things you want to think about if you, in fact, go down the agent route.